So with even more retail results on the horizon next week, let's check in on the state of the consumer with Telsey Advisory Group CEO Dana Telsey. Does it just reflect the fact that Walmart is 60% groceries and that's what consumers are spending on right now?
It's that, plus it's the fact of the trade down, and you look at what consumers are spending on, plus you look at the value that they're offering, you look at the convenience of their locations, what they've done with digital. It all wrapped up very nicely, leading to better than expected guidance.
Can we look at the results over the past few days and really glean anything about the health of the consumer? Because even Home Depot, I pointed out earlier, said consumers in good shape. They're just not spending as much on their home because we have this big pandemic shift still happening.
You do. I think there's a couple things to glean. Look at what some of the companies have said. Improved traffic. So consumers are going back to the physical store. That's a good thing. You look what they've all talked about. They're definitely more discerning in their choices. They're looking for value. You look at Bath & Body Works this morning that basically was able to execute on some better promotions that didn't impact their margins as much. I think retailers are learning how to promote and promote more effectively. And I think there's more margin clarity than sales clarity. Because, yes, you still have another tough quarter to come. Next, in the back half of the year, that's the question mark. Will the rising interest rates impact the ability of the consumer to spend on discretionary? It's about essentials and value. Discretionary is challenging.
Although we mentioned earlier this morning, food at home has been down a couple of months. I mean, is there a chance that discretionary gets a second wind in the back half?
Well, it could. And I think if you look at food and you look at experiences, look at travel, that's what consumers are spending their money on and their time on. Look what we talked about earlier. We haven't seen each other in person in a while. I think people want to see each other in person.
Yeah, you know, I'm looking for signs about luxury cracking because that's been such a strong part of the market. And I did note two things today. Walmart noted the trade downs from the high-end consumers coming to Walmart. And then Burberry overseas, really good quarter because of China, but weakness in the U.S. And so the stock got hit. Sales down in the U.S. and citing a pretty weak environment. So are things turning on luxury?
Yes, luxury is moderating. I think it's moderating across the board. You mentioned Burberry down 7% in the Americas. You take a look at what worked for them. The higher priced items worked. The lower priced entry items didn't work. And that's some of the footwear overall that didn't work as well. But we've seen moderation in some of the luxury goods spending too. You need that traveling international consumer to come back. But keep in mind, have you checked out the new Tiffany store on 57th Street?
No, I've heard it's fabulous.
It is fabulous. You got to see it. It is something to see.
Yeah, Gal Gadot cut the ribbon. That was a big party. What about the notion, we keep talking about different refresh cycles, meaning we all bought a grill during COVID. You probably don't need one for a few years, but you might be in the market for a new laptop even if you got a laptop in COVID. How are you thinking about that?
I think electronics is still tough these days. I think people still have the computers, the iPhones, whatever they are doing. And also with hybrid work, there's more variety than what you've had in the past in order to work differently with electronics, given what's happening with even the Zoom meetings that are continuing, some virtual, some in person. Hybrid matters.
So you're not that bullish on what electronics are doing?
No, I'm not as excited about electronics. I'm excited about the essentials and I'm excited about value. I thought it was very interesting yesterday that TJX called out the strength of apparel and accessories. Why? They're getting better brands at value prices, and the consumer's discerning.
So what's the most underappreciated story right now in retail?
I want to watch what Burlington does. I want to see what some of the vendors do also. I think PVH and also Ralph Lauren. You look at PVH has the international bent. You look at Ralph Lauren, who's modernizing their assortment. That's interesting to me. And the off-pricers. I mean, the off-pricers are where the traffic is going to go with Burlington and Ross.
Interesting. Goose could not hold gains this morning. Any idea what happened?
Haven't heard what happened there. I'm watching the inventory levels, watching prices. Keep in mind, it's going to be about what the wholesale orders are. Every wholesale account is looking to reduce orders, and retailers and brands will chase into the trends.